Hi guys, welcome to our ETF Junction channel. I'm sure in your day-to-day travel you have used metro as a mode of transportation, and if you look at metro, it gives you very standardized working. From one location to other you reach exactly at the same time. Also the price of a place to other place is exactly fixed. Take other mode, which is the chauffeur driven car. Here it is being run by a chauffeur who knows the by lanes and also the uncrowded area and the shortcuts to take you from one destination to other. You can reach it in faster time period. Also it gives you a lot of flexibility in terms of reading a newspaper in the car, sipping a cup of coffee, all that. Now this is exactly how we look at investing. Just like these two modes of travel, you have a different ways of investment. And as you must be hearing, passive investing is making a lot of splash as far as the investment community goes in India. This brings us to today's topic of discussion: active investing versus passive investing. If you look at these, active and passive follow a similar kind of trend. If you look at passive investing, it's just following the particular index where there is no interference, there is no involvement of a fund manager. As against this, active investing, as the name suggests, here there is a full-time involvement. A dedicated portfolio manager who is backed by a team of analysts ensures that he takes care of the investment very actively. The goal of active investment is all about beating the market and ensuring delivering a better return. How is it done? It's very simple, that you intend to make best use of the opportunity given by the market in the short term and optimize that to deliver a better return. As against this, in the passive, you do not try to outsmart market, you just carry on with the market, and whatever is delivered by market is taken at your end. Now let's look at the strength of these two investing. If you look at active, as there is a portfolio manager with his team, obviously the cost increases because he has to do fair bit of research to get the best time of selling and buying the stock to optimize and deliver a better return, which is completely missing in a passive fund. Obviously that is much cheaper. Look at the other part. Active obviously has a huge flexibility of either taking more number of percentage of stock or lesser proportion of stock, so it is completely up to the portfolio manager to do it. The flexibility is completely rendered as far as passive goes. Now look at the third aspect. When you buy and sell more often in an active portfolio, the cost of taxation goes up, which is not available as far as passive goes, and that's why we say that is much cheaper and more tax efficient. Now, if you look at passive, obviously it provides you better transparency. You can have access to the portfolio at any point of time. It gives you a lot of simplicity. It gives you also affordability. Now these are the features which are very strongly embedded in the passive investing. If you look at, there are certain things which passive investment really stands out because of its inherent feature. And what we are now seeing today, that largely India is a market which has been focused on active investing. Now by and by people are getting to understand the strength of passive investing, and they started imbibing in their portfolios. As you look at active investing is similar to what a chauffeur driven car is all about. There's a driver who drives the car. Here there's a portfolio manager who drives your portfolio. The second part, there's a huge amount of flexibility you have. When there's a chauffeur driven car, you can tell him to get your paper or tea. Here also the fund manager, based on the opportune time, picks up and sells the stock to deliver a better return. Now look at, on a passive investing is similar to a metro. Everything is standardized, right? You don't have the maneuverability of doing anything different, right? You take a seat or you go from one place to other, whether it rains or whatever happens, you reach your destination well in time. I think this is the way both part of investing works, and both are equally important and should be part of any portfolio. Thanks for watching this video. Hope you really liked it. Please like, share and subscribe to our ETF Junction channel for such videos in future.